I'm getting going.
Yeah, buddy.
Hello, everybody. Welcome to the TraderMerlin Show. It is your Tuesday, the 13th edition. I see you got a big group here with us today, so I'm happy to have you all joining me live. For those that are live, for those that aren't live, well, you're not listening to it right now, are you? You're probably watching some video or listening to the podcast. Anyway, thank you for joining. Whichever manner you are joining us, Les, it's your day. Les has been asking me for specific options questions, and as you guys know, I don't claim to be an options expert. I think I'm good at what I do, but I'm very simple with my options strategy. So I thought, you know what? I'm going to address trade management today, something a little bit more complex than what I would go into, but trade management with regards to options, and we'll talk about some of the different considerations for spreads and whatever questions you guys might have. So for those of you who are new, if you type questions in the chat, do question marks first so I know those questions are coming directly to Corey and myself. Otherwise, a lot of times it just gets lost in the chat of the room. Anyway, without further ado, we've got Mr. Corey Lane of Traders Army joining us today. Corey, how are you?
What is up? Good to see you. How are you?
Fantastic. It's just another Tuesday, and I'm excited for the volatility this market is presenting us. It's good stuff. Love it.
I love it. I love it. Not just another Tuesday. It's just Tuesday. It's an awesome day.
It is Tuesday. That's true. I mean, and usually there's tacos involved, which makes me happy on a Tuesday. So how can we go wrong with tacos?
True.
Tell me, is there anything new going on in your world? I know you've always got different projects and courses and content coming out. Anything new you want to start with?
Dude, I mean, we've always got stuff going on, man. We're busy with trading sessions, pretty much every day, which is fun. I mean, the markets are always changing. So at Traders Army, we started out with just a couple, just to kind of keep the schedule light. But, we got trading sessions. We got 8 trading sessions a week now we're doing with people. And I got some new options courses that I launched in June. And so, it's funny, one of your listeners here, Lisa, who was just talking about trading options on futures, I've got a brand new course coming up in August it's called Options Plus, focused on all different types of options trading. And so it's really appropriate that we're talking about options trade management, because that's kind of what I've been focusing on my time, creating content around that for Traders Army folks.
Perfect. Well, it's appropriate because, as you and I know, that without trade management or risk management, it's most likely all for naught. Ultimately, it'll come back and bite you in the ass, and you end up losing everything. So let's talk a little about trade management today. Here's the questions that came in. I'm going to read all 3 of them, and then we can kind of go through them one by one. And Les, thank you for sending this in. I'll start with these 2 here. It says, I've been trading vertical short puts and having good success. And here's the 3 questions. When do we close the trade, since most successful traders would not hold it till expiration? Number 2 is, I've heard it mentioned that when the trade reaches 75 to 80% of premium, close the trade. What about closing the trade the same day it was placed if it reaches 25% of premium, and second day if it reaches 50%? So we'll go back to your thoughts on holding things till expiration and when do we close trades?
Yeah, so that's a good one. All those are really great questions. And I've done the whole hold through expiration thing. And I did that for many years. And it worked really well. Hold to expiration. And my primary reason for holding to expiration was, I was a little bit too cheap and I wasn't willing to pay the commission to close the trade when it was almost worthless anyway, maybe a week before expiration. And that worked pretty well in a predominantly strong bull market. But then, as we started to, and this is going back, we've obviously seen many different market environments in the last 10, 15 years since I've been doing it. I've been doing this for 16 years now, but just in the last 10 years, we've seen a lot of different market environments. And there's a few moments in my trading career that just solidified, I am never holding to expiration again. And that is on the day of expiration. I remember very vividly GLD when I was trading. I did this with call spreads. I did it with put spreads, where it was the day of expiration. And mind you, I had the opportunity, Merlin, 2 weeks before expiration to close it out for 85, almost 90% of my full profit potential when selling options. But I didn't. I was like, why would I do that? It's going to expire. It's so far away from my strike price, current price is. And so the day of expiration, dude, I kid you not, it hit my short strike. And my rule is, if it violates my short strike, I was wrong. I didn't think it was going to hit that, and I had to close it out for a small loss. It wasn't like a big loss or anything, but I closed it out for a small loss. But the most frustrating part was I had an opportunity to close it out for near max profit, and I didn't. That happened to me twice, and I swore never again that I was ever going to even try to make that decision, that I was 100% of the time going to put an order in that if at any time during the life of any one of my credit trades, so selling puts naked, cash secured, selling call spreads, put spreads, iron condors, whatever, that if I can get 90% of my profit potential anytime before expiration, I'm out.
Wow.
Yeah.
It's funny. I feel like you're a psychologist, actually, because it was almost like you were pointing your finger at me and you were saying, you're holding these things all the way to expiration, Merlin. You had a profit because I'm doing exactly what you do. But it's funny because it's happened where I've been exercised a couple of times, and I'm okay with that because I will just sell some calls against that.
Sure.
But it's funny because I had all those same feelings of, I'm not going to spend the commission to get out of these options when it's just a few more cents. It's no big deal. I'll let them expire. So it's kind of funny. You were basically saying the exact same things that I do in my 1% strategy, I like to call it, but kind of humorous there. And I'm sure others are probably feeling the same thing.
I think we all go through it. I think you have a couple of moments and you're like, all right, I'm changing that.
Right.
Yeah.
So 90%, I think that goes to his second comment. Let me go through, because he says, I'll read him over here. He says, I've heard it mentioned that we can, when trade reaches 75 to 80% of premium, close that trade. So your number is 90%. So you're basically almost all the way to it, but not quite.
Yeah, because, it's actually a lot harder to get to that 90%, long before expiration, when you're dealing with an iron condor where you're writing a call spread and a put spread. So, with my more slightly directionally biased trades, for instance, selling puts, it's got, a neutral bias to it. I just don't think it's going to go down a lot. But if price goes up, it's because price had come down into an area of support or fair value demand, and I expect prices to rise. And so if they do rise, and I've sold some puts or I've sold a put spread, yeah, 90% is pretty achievable pretty quickly, actually. I just had one close out on GLD. Was it today? Gosh, my days are blending. It was either yesterday or today, but I think it was today. Closed it out today. It was today on a little bit of gap up in GLD. And that was a trade that was put on a week and a half ago. And that's an August expiration trade. So it's already closed, and it's not even August yet.
Yeah.
And so if you've got a little bit of a directional bias, selling puts is bullish, selling calls is bearish, and it actually moves that way because you're paying attention to the chart and building the trade around the chart, not just around the option itself, then yeah, I can close out for 90% many times, many weeks in advance. But I actually see nothing wrong with an 80% rule either. There's nothing wrong with that at all.
No. I think it's good to kind of have to establish whatever your rules are because, for example, you're saying 90%. It's kind of like me saying, I'm going to shoot for 3-1s. And you're going, that's fine. Well, I'm going for 4-1s. It's okay as long as you have a framework to work with, because once you build the structure, you can modify or tweak things as you see the results forming around that specific setting that you make.
Yeah, agreed.
Big Eb, the listener question relating to the premium, that was from Les, who's here with us today, and that question was, I'll put it up on screen again. There were two that we started with. One was when did we close a trade? And then the second part was looking more for percentages, where he says, what about 75, 80? Corey uses 90%, which, again, it doesn't have to be 90% for you. It's really what works for you. And Corey's been doing this for 16 years, so he knows what works for him. What about closing the trade the same day it was placed if you reach 25% of premium, or maybe the second day if you reach 50? Do you have anything like that?
I would do 50% of premium. I don't actually mind that. I don't do that per se. At least it's not automatic for me.
Right.
But I don't do anything for 25% of premium at all. And I don't personally do the 50% thing because you got to think about when you structure the trade to begin with. You structure the trade based upon your expectation of how many times out of 10 are you going to win, right? And if that's 7 times out of 10 on a credit trade or 8 times out of 10 on a credit trade, you have to make sure that you pre-plan to take enough reward to justify the risk.
Right.
And so many times I'm trading a 1-to-1 reward to risk for my credit trades. And even sometimes I'll risk up to twice what I stand to make. But risking twice what I stand to make means that I'm accepting 90% of my profit potential. If I get out at 25% of my profit potential, now, technically speaking, Merlin, I'm risking 4 to 5 times what I stand to make. And when you bundle 100 trades together, if you're taking profits at 25 or even 50%, and you're risking 4, 5, 6 times what you made,
you're right.
Then the math doesn't work. You won't actually be profitable long term. You may be profitable on that one trade, but you won't be profitable long term unless you're right 90% of the time or more.
Right. You know, and I this is a good point to bring up because there's an old phrase out there that says you'll never go broke taking a profit, and that statement is actually incorrect.
It's very incorrect.
I mean, you can take all the profits you want, but if all of a sudden you have more losers than you do winners, you're a net loser. So, you know, I'm glad you brought that one up because it's a fallacy I think a lot of people have with regards to trading and investing.
Yeah, and that's largely going to be the case too, because I get people asking me about, well, how far out of the money should I sell my puts and calls? And many people are out there trying to sell, 95% probabilities, selling a 5 delta or a 10 delta. And they're saying, yeah, I'm going to win 95% of the time. Great, that's fantastic. That one time you lose, though, and it wipes out 6 months of profits. I've had it happen to me. In one trade, forget about it, right? You won't go back to that. It's unsustainable, especially when the market gets a little squirrely, which it kind of can be today.
Yeah.
So I don't find myself following some of that. What would be the perceived as super high probability, selling very far out of the money options is incredibly high risk when you're wrong, and I don't promote that at all.
Yeah, I don't either. I mean, it sounds good in theory, but theory and application are two very, very different things.
100%.
I'll read off Les's third question here, which deals a little bit more with duration of trades, and I think this definitely depends on what the trade setup is and what strategy you're using. He says, how long to keep the trade open? Let's say it was placed with a 30-day to expiration. After 2 weeks, should we close the trade? Or after 3 weeks, should we go for 3% a day for profits? So after 20 days in the trade, should we close the trade for 60% profit? You're putting a lot of numbers and variables. Of course, Les is a NASA guy, so I guess he's got to have those numbers in place to run. But are there rules that you have with regards to longevity of a trade, duration, and maybe profit targets within that period of time?
So because I don't just trade short puts or short strategies, right? Credit spreads, anything that is short, I trade directionally biased. Buying calls, call spreads, buying puts, put spreads. I think it really depends on what type of trade it is. So in this example where it's just I'm selling puts, the idea is that I'm going to be in the trade until I get 90% of my profit potential or my stop is hit, personally. So the good news about selling options is that as long as the option that you sold is out of the money, then you're always theta positive. So you're always getting the benefit of time decay on your side. So I really don't have a time limit as long as time is on my side, meaning theta, time decay. Now, when you get into debit strategies, which is not what Les was talking about, which I still do a lot of, now there is a concern for time decay because depending upon if where the stock is relative to your strike price, or strike price is if you're in a spread trade, then you could actually be theta negative. And in that case, I do not want to be in that trade in the last 30 days of its life because theta really tends to ramp up a lot faster in the last 30 days of its life. And that's going to overwhelm any money I might make in delta. I might be losing it in theta.
Right.
Now, if I'm theta positive, I'll hold on as long as, I'll stay in it. There's no reason not to as long as you're theta positive. So I don't have anything that's really like, if this, then that, when it comes to selling options. It's just either I'm going to get stopped out, meaning my short strike is violated, and I didn't think it was going to be, so then I'm wrong and I'm out. Or I get 90% of my profit potential, and it closes automatically because that order's already in place. Or I stay in the trade.
Right. I think it's interesting because I did a presentation with a guy in London, I think it was London, many, many moons ago. We're on stage, and that was actually one of the questions that came up to this guy. And he says, if I put on a trade and it doesn't do what I think it's going to do within 5 trading sessions, I'll close the trade. And I was like, that's kind of arbitrary. I don't get the justification for that methodology whatsoever. And of course, hey, that's for him. Good for him. It worked for his strategy. But I'm more in the camp with Corey here, which is if you're in something, and especially since you guys know predominantly what I'm doing is I'm selling puts, and for my strategy, I know Corey's going to be like, oh my God, do spreads, you can make so much more. I'm predominantly just selling puts, so I'm not concerned about time. I mean, really, for me, it's about the time is the length of the contract and going all the way to expiration. If you're playing directional and you're buying calls or buying puts, yeah, it's much more of a factor. As Corey mentioned, the value of those options just really starts to taper off within those last 30 days. So, I would never buy a call option that's expiring in under 30 days. It just doesn't make sense for me. I know there's some strategies out there for that, but for me personally, I wouldn't do it. As somebody who's buying an option, I need to have a long window of time for that trade to come to fruition, so 90 days plus. If I'm a seller, hell, I'll sell Friday's options if I'm going to get enough premium for the risk for me,
Yeah, all day long. It really just depends upon, and it really requires you to understand your options Greeks, really your option sensitivity to time volatility and movement. And for selling options, time is your big one.
Yep. Code here says, do you ever do 0 day to expiration trades on the SPX? We have had guests that's their only strategy they do is, 0 DTE trades. Do you do any of that stuff?
Sometimes. Yeah. I mean, but it's got to be worth it, meaning the risk reward has to make sense. I don't alter my requirements on any sort of credit spread on the SPX just because there's 1 day to expiration versus a week versus a month. I still require 15% return on a $5 spread. So if I can get 75 cents on a $5 spread, same day expiration, out of the money below some sort of area of support or fair value demand or above resistance or above fair value supply, then yeah, I'll absolutely do that. No question.
Let's see. Lisa says, what are Corey's thoughts on rolling? Now, Lisa, are we talking about ecstasy here, or are we talking about rolling options trades?
Can we talk about that right now, Merlin?
Let me throw out some house music. I got some lasers and fog machines. We'll make this a totally boots and cats and boots and cats. I'm sure it means rolling of options. So what are your takes on rolling of options?
I'm pretty sure. Again, depends on the strategy, depends on the outlook. I actually do a fair amount of rolling on naked options that I sell because, Merlin, you mentioned earlier, like you've sold some options and you've been assigned on some and you're okay with that. And I always know ahead of time if I'm okay with that. And sometimes I am, but most times I'm not. I'm not okay. I don't want to be assigned. I don't really want the stock. I just want to sell some puts or put spreads and get some premium. So if I do get in a situation where the price does drop and I've sold some puts and I'm not a willing owner, I use the analogy where it's like, if you look at me, Merlin, and I'll back up a little bit, you and I have stood next to each other. You and I are kind of the same build.
You're far more handsome, so sorry.
What's that?
You're far more handsome.
I'm not sure, dude. I'm not sure. You're a good looking dude.
All right, thanks.
But I think if I were paid money, if someone told me, Corey, we'll pay you $100,000 a year to get on a football field and just be on the field during an NFL game, I'd be like, I mean, that sounds kind of cool. I mean, the crowd's there and $100,000 a year, sure. I mean, what do I have to do?
Right.
Do I have to take delivery of the ball? Because if I have to hold the ball, I'm probably going to die, right? And so, and if they tell me, no, you don't have to hold the ball. If the ball comes to you, just back up. Just back away from it. And, you don't have to take delivery. You just have to stay on the field. Well, I say, okay, then I'm in. Sign me up. And that's kind of how I look at selling options. The scenario for me is if price comes down and it's getting close to my puts that I sold and I'm not interested in owning, I'll absolutely buy those puts back. And I know I'm taking a loss on those puts. And I can always roll down in price and out in time if I need more time and roll for a credit, which means I'm still going to make my original money in the first put that I sold. It's just I'm delaying the time frame in which I'm making it in because I might have to roll out in time, and I'm moving further away from the ball, which means I'm less likely to get it. So I absolutely do roll. And you can do that with spreads, but I find myself majority of the time doing it more so when I sell naked options. It's much easier to do it with naked options than it is spreads.
Yeah, and I think this is perfect example of it all depends on what your objective is, right? So you probably didn't catch the show, but I think it was last week, maybe it was this week, I don't even know, these weeks all blend together. But I have been doing a strategy for quite some time now, where basically the beginning of the month, or actually right after options expiration, I'll reevaluate and I will find assets I'm interested in. So I've been looking at, XLE or silver or Russell at the right price, and I will be selling puts out of the money, deep out of the money, and if I get filled, great. If not, I'll collect my premium and move on. And that premium is generally about 1%. That's my target for these premiums.
Yeah.
If I get executed, though, I'm totally okay with that, because in that portfolio, I've already set my mind up that that's okay. Now, if I didn't want to, I could do exactly what Corey's talking about, which is I'll close it out right before it gets there, and maybe take a little bit of a loss in that trade, or roll it into another even lower out of the money strike. I mean, these are things you can continually do. It's just different strokes for different folks. But I'm okay with being exercised and then selling calls against that until I'm back up to the point. So.
Yeah, and I agree with you. And I think the most critical thing about this entire conversation, Merlin, is knowing what you want to do before it happens.
Yes.
Because if you don't pre-plan to roll, you're always going to wait too long. Mm-hmm. And once that option becomes in the money and the gamma kicks in and causes that delta to really ramp up against you, and you start losing more than extrinsic value, you start to lose extrinsic and intrinsic value, it gets way more difficult to roll down and out for a credit. And so I always pre-plan, do I really want this or not? And I always know, and I never change my mind in the middle of it all, because if I change my mind in the middle of it all, I know I'm behaving more so from an emotional standpoint than I am an objective standpoint.
Yeah. I love it. Tom says, sometimes the humor in these guys is great. Tom says, I will now think about fielding a punt each time I consider rolling an option. I wonder what a fair catch would be in options, and what if the ball bounces into me? And I guess that is, when it bounces into you, that's when you're thinking, okay, I've got plenty of time, the price is far enough away, and all of a sudden you get that black swan candle that all of a sudden moves 15%, and you're like, oh shoot, it hit me, I'm in. I mean, occasionally that can happen, but usually you're going to be getting out of these things far enough in advance.
Yeah, and then, with the platform that I trade on, Merlin, it actually lets me, I actually have a specific delta requirement. So it's not a premium requirement, but I know that if I sell an option that has a 25 delta to it, as a for instance, not that I look for that, but if I sold an option that has, say, a 25 delta, and that thing becomes a 40 delta, it's almost at the money, it's not in the money yet, but it becomes 40, I can actually set an alert in my platform, which is Thinkorswim. You guys can know what it is. Many of you probably use it. But you can set an alert on delta that says, if I have a delta of 35 or 40, let me know, and I can actually manage the position before it ever becomes in the money. And so I use a lot of alerts to let me know, so I don't hover over a trade and watch it every day.
Yeah, no, alert. I mean, I showed the viewers alerts the other day, and they can be very powerful. What about Watchlist? Les says, does Corey have a scan for his possible trades? Do you have a universe of securities that you just kind of regularly stick to?
It's the same universe of securities. It's about 250 stocks.
Oh, that's quite a bit.
Yeah. I mean, it's a decent amount. They range anywhere from $4 stocks to Amazon. You know what I mean? So it's everywhere in between. And I got this list. I basically compiled this list from two watch lists that Thinkorswim, makes public, which is their penny increment options watch list and their weekly options watch list. And so I've kind of gone down and over time I've started to take out the stocks that have less liquid options, that might have wider spreads, and just sort of delete those and create my own little watch list that I watch. So it's a good little list, but I don't scan it with like an actual scan that I program in the platform. I literally scan it with my eyes.
Yeah.
Period.
Okay.
No better way to scan it.
It's interesting because I was showing them with this, because basically, like you, I'm sure you're very similar to me. You have many different accounts, and of course, I trade a lot of different assets. You're predominantly options and futures. I'm options, futures, forex. I mean, you name every asset, I can probably have an account there somewhere. In this one specific one, I'm just selling options, I'm selling puts, collecting premium, and the goal is 1% per month, taking relatively low risk. And I have about 13 or 15 different ETFs. In that portfolio, it's almost exclusively ETFs because I don't want that single stock risk.
Right.
You're much more, again, in that account, it's basically set a trade and don't look at it really for another month. I'm not really concerned about it. I don't manage that thing, not even daily or weekly. It's literally once a month I'll check it. If I'm in an Amazon share, or if I'm in, Google or Apple or something real volatile, you're going to need to be more active on these things. Because the volatility that's tied to an individual security is much higher than you're going to get with ETF.
Yeah, and again, like one thing that I avoid, like the plague, is trading around earnings or known news events.
Interesting.
Right? So I avoid that stuff. And so the difficulty that I was finding even in my trading room yesterday that I had was there's a lot of stocks that are releasing earnings in the next few days, week and a half. And so I stay away from entering trades and holding trades through earnings personally because I want something that's more predictable. And I feel like if you've got 4 days out of the year where you've got completely unpredictable price action, but you've got the other 245 days, 246 days of the year that are way more predictable, I'd rather trade those days and not those other 4.
So even as a seller, because the premium can be so high, you can go so far out of the money. And I'm saying this devil's advocate style here because I actually have had some people on it that they're looking, like this week, they're going, all right, I'm going to be looking at options on Wells Fargo and Citigroup and Goldman and Bank of America because they're all reporting this week. They're looking for that stuff.
Yeah, not a chance. I haven't experienced it personally because I've always stayed away from earnings announcements like that. Except for, and I should preface it with this: when I first started trading, stock prices were a lot lower. Bigger moves, 18, 20, 25% moves on earnings were a lot more available for stocks like Apple. I mean, Tesla wasn't even around, but you got like RIM. These stocks would move 18, 20, 25% overnight. So if it were a trade like a long straddle or a long strangle, that was a great trade 15 years ago. But with stock prices as high as they are now, the percentage moves that stocks are making today on earnings are not as big as they once were, but the options are every bit as expensive, if not more expensive today. And so a long straddle, a long strangle really doesn't make sense for a trade, today holding through earnings. But when it comes to selling options, there's no way I'm selling options in front of earnings.
Yeah.
I will never forget, I was teaching an options course in Dallas, and Chipotle was announcing that evening, and somebody in the class wanted to set up a short straddle, a short strangle. And they were like, look, we can sell, we can sell a 10 delta call and a 10 delta put, 90% chance these things are expiring worthless this week. And Chipotle needed to stay. And by the way, this was a $100 range on a $300 stock. And I'm like, yeah, that seems pretty realistic. I said, but I'm still not going to do it. And they're like, okay. And nobody did it. And I'm like, but let's come back and watch tomorrow. And I kid you not, dude, I didn't expect this, but this is, again, why I reinforce not selling in front of options is because Chipotle was, from a volatility standpoint, expected to make about a $50 move on earnings based on implied volatility. So if you sold options 60 points away, you think, oh, I'm going to be fine.
And that's what they did, right? They basically said 50 above, 50 below, you got a 100-point spread.
Yep. Chipotle moved $97 on a gap overnight. So that means whoever sold puts 60 points out of the money, thinking they were safe because implied volatility was measured at 50, a 50-point move in either direction, found themselves over 35 points in the money on a short option. And I'm like, dude, somebody's getting their ass handed to them now. Yeah. Right. And by the way, not only would I have not expected that move as a buyer of options, I have to protect myself and assume that it can make a bigger move as a seller. And there's so much unpredictability coming around earnings that I just avoid it, man. Right. Forget it. Somebody else can have it. I really don't care.
No, Yeah, no, I love it. And again, it's defining risk. I mean, you have people right now that'll literally mortgage their entire home and put it in Dogecoin, which has no use case scenario and is an absolute piece of garbage.
Right.
But, ultimately the vast majority of those people that have those kind of gambling tendencies will destroy themselves. And it's interesting because even as somebody who has as much experience in options as you're still not willing to take that risk. Like I find myself every now and again going, I'm okay to take on an exceptional amount of risk for this specific trade because of my personal feelings about it or my analysis. And it's rare when I'll really go for it and load the boat. A lot of times it pans out, sometimes it doesn't. But I've got the experience. You look at some people who are brand new and they're taking those kind of risks right away from the very beginning and just getting absolutely smoked and they disappear. Unfortunately, they end up being the gravestone markers for the financial markets that you look back and go, oh yeah, you don't want to be that guy. Learn from them.
Well, unfortunately, it's folks like that and that type of behavior that gives this business the bad name that it is, right? And then when somebody asks you, hey, what do you do, for a living? And you're like, well, I trade and I teach trading and all this kind of stuff. And they're like, oh, well, that's not really possible for most people. Yeah, you're probably right. It's probably not for most people because most people aren't willing to A, put the work in, and B, practice really safe risk management.
Right. Do you have your Thinkorswim up there?
I do.
Can you show us where those watch lists are? Thomasina is asking. So can you show me where those two sets of watch lists are? So if share your screen, make sure you hide all your account numbers as you share it here. I don't want to get you into trouble.
I actually don't care. I show account numbers all the time. I really don't care.
You just got to get his password to log in right, which is Big Dog.
Yeah, right. Big Dog. Hang on a second. Big Boy. What was that one? Big Boy. What's your Big Boy? What was that commercial?
Oh, well, wasn't that he was a radio show host. Big Boy and oh man, I'm dating myself now.
Can you guys see my screen? I don't even know how this works.
Not yet. You should go share screen at the bottom somewhere and choose your screen.
Did that. Settings. Oh, Skype needs permission to share screen.
Wow, you got it locked down. Somebody's an Apple fan using Apple products. That's what's going on.
Okay, so Merlin, tell me what I'm doing here. It says Skype will not be able to record the contents of your screen until it's quit. Well, let's see. I'm going to hit later and see if it shares it.
Well, that's kind of weird. I've never seen that pop up anywhere before.
I don't know, but maybe it's not record. Maybe it has to do with.
You just hit the two little squares that says share screen at the bottom.
Yeah, but then it was a weird thing. So you should be able to see it.
Yep, there we go.
Right?
Got it.
Okay, great. Yeah, you wouldn't be. I guess I won't be able to record it. Like if I'm using Camtasia or something, but at least I can see it.
Perfect. Well, we got it nice and clear.
Nice and clear. Perfect. So where are those watch lists? That was the question, right?
Yes.
Right. Okay. So on the far left-hand column, you'll see I have like my basic watch list, which is all my futures and just regular, volatility indexes and ETFs. So if I want to, first of all, populate, let me delete that watch list. If I only have one, I'll go ahead and add another watch list. And then what's nice is it'll bring up just any random one. I don't know what it'll bring up for you, but when you click on this drop-down menu here, if you saved any personal watch lists, it'll be under your personal column. But all the ones that say public in front of it and it's alphabetized, right? Anywhere from percent change gainers, losers, 24-hour trading, all ETFs. Really everything in here. Mm-hmm. Futures. If you go down to, like, I basically started trading with, where'd it go? There it is. Public I to R, penny increment options. That's the one that I originally started with. And that's been around for years. And then I went down to public R through W to grab the weeklies. And those are all stocks that have weekly options trading on them. Now, I will warn you, in both of those watch lists, there are some stocks that have not the most liquid of options.
Right.
So you're going to want to, like if I pull up weeklies, what you can do is you can then, once it's pulled up, you can, and again, this is a process that you have to go through, but hey, it's worth the effort, unless you want to go through 600 stocks a day or however many it used to be. And there's a lot of redundancy between penny increments and weeklies.
Sure.
What I would do is I would export this to a Excel spreadsheet, and that way you can immediately delete duplicates. And then once you start going through each one of these, you can start to recognize which symbols don't have the most like the greatest liquidity. They don't have the greatest, option spreads, and you can start to delete those from that spreadsheet. And once you have a really solid list of stocks that has liquid options, weekly options, whatever you want, then you can re-import that list and make that a watch list that you just focus on every day, all day.
Yeah, nice. Yeah, I watched.
There's a ton of stuff that they put in here that's just updated daily, and some of the stuff is updated never, but some of the stuff is updated daily.
Well, no, it's great because I was mentioning on the program the other day, people were asking me about specific indicators, and I said, one of the keys of platforms like this, and he's got Thinkorswim up on the screen here, is you need to learn how to utilize those tools to make your life easier. And I do scans and filters all the time and just filter through thousands of stocks just to find the handful that I want to trade actively. And learn your platforms and master them because it's a huge advantage.
Yeah, indeed.
Go ahead.
No, that was it.
That was it. He's like, I'm done. All right.
I'm not done. I can hang out as long as you want.
Oh no, they keep trying to make me do hour shows. This show initially was supposed to be a 30-minute show, and it's been like an hour for the past year and a half now. So I'm trying to cut it down a little bit because I got so many other things to go. But anything else? I got your. I had your Traders Army page up here. There it is. I'll bring it up for the viewers out at home so we can maybe do a little plug for Corey. Traders Army, Wall Street is playing a game that most people don't even know exists. You have, I think, some free webinars or something? What do you got for the viewers?
Yeah, so we're kind of structurally changing what the front end of the website looks like at the moment. So we're kind of in a little bit of a transition period. And I was talking to you a little bit about it with some of the people that we're partnering with to kind of handle, kind of the front end stuff so that Chuck Fulkerson and I and Herman and Justin can just handle the teaching and the content, and we don't have to get into, any of that other stuff that, businesses require to maintain and grow, like marketing and stuff.
Oh, that stuff.
That stuff. As much as as that stuff could be fun, I just love trading and teaching and hanging out. So,
yep.
So if you have questions about our memberships, if you have questions about class, what I would encourage everybody to do is just email me directly, and let's get on a Zoom call. Let's get on a phone call. Let's chat. So Merlin, should I just put my email address like in the chat box or something like that?
I don't think you can do emails, but tell you what, if you what is it? I'll put it on the screen here for the viewers.
It's easy. It's just my name, Corey, Corey, .Lane, Lane, at TradersArmy.com. Yeah, it's how you spell my name with a dot in the middle at TradersArmy.com. Just say, hey, if you want to be a part of the community and be a part of the pro membership and watch the on-demand content and be a part of the 8 to 9 trading rooms a week that we're hosting right now, and maybe some of you have questions about, hey, this advanced options class you have coming up in August. Tell me more about that. Then, yeah, just reach out and I'll send you specific, information on that. So let's talk, because we're doing some changing to the front end on how people enroll and become members and all that kind of stuff.
All right, there you guys go. I've got it on the screen now. You can see Corey.Lane at TradersArmy.com. I think I spelled everything correctly. I also typed in the chat for you out there. Code asks about cost. It depends on, it's like everything. It depends on what you are subscribing to, whether it's...
Yeah, I mean, like Merlin, I have no problem talking about it. But if somebody wants to be a member and join in on all the trading rooms and have access to all the on-demand, it's easy, man. It's $149 a month. It's easy. It's about as low as it gets when it comes to 40 hours of on-demand content and 8 to 9 trading rooms a week, plus member community, all that kind of stuff. If you want specific classes or courses and unlimited retakes of all that stuff, it just depends upon what course you're talking about. But it's about as, Chuck and I firmly believe and are rooted in the idea that you shouldn't have to give up your firstborn to learn how to trade. We come from a world where you spend tens and tens and tens of thousands of dollars and get into this, deficit mentality where immediately your first trade has to pay for your education. And it's like, no, that's a very terrible place to be when it comes to trading mentality and going in with an objective attitude. If you spent, $30,000, $40,000, $50,000 on education, I'm not saying it's not worth it. I'm saying it's probably very worth it. What I'm suggesting is our emotional attachment to that money means that you're probably not going to be a very good trader especially out of the gate if you're focused on making that money back. So we try to make it affordable and very inexpensive for people to join. And it's 149, Lisa. 149.
And you saw the question above it. This is probably the most important question of the day. You've been on lockdown. Obviously, we can't see your drum set behind you now, but he's in his drum studio, which is also his broadcast studio. Corey is a musician. Medic says, what concert or band are you dying to see and one you can't wait to see live after COVID? I want to know who you're looking forward to seeing.
Shit, dude. I really want to go to Foo Fighters this Saturday at the Forum. Do you know anybody?
I'm assuming it's sold out?
I'm assuming so.
I know somebody, it's called StubHub, who's going to totally just screw you on fees.
I'm assuming so. I really want to go see Foo Fighters this Saturday at the Forum. I missed him at Canyon Club a couple of weeks ago, but I have a lot of bands that are on the East Coast that are more like hard rock bands that probably won't be touring on the West Coast, but a lot of bands that my kids listen to, I listen to. They're a little bit harder rock, a little bit metal, but we'll see. I'm just excited to start to see shows.
Yeah, no, me too.
My boys are starting to play more shows, and we got to connect there, Merlin. We had a little bit of miscommunication last weekend.
It was so funny. I was standing on the pier going, I don't hear any music down here.
So, the boys are playing the OC Fair, the Orange County Fair next weekend, and then they're playing the Hangar in Irvine, which is not too far from you.
They're playing the Hangar in Irvine? Yeah, let me know. I'm walking distance.
A brewery right around the corner from. Do you know where it is? The Hangar 24. I think it's Hangar 24 off of Main and MacArthur.
Oh, okay. Yeah. I thought you meant that because there's literally a place here called the Hangar inside the fairgrounds. I was like, that's even better. Perfect.
Well, we're playing there too. We're playing there next Saturday, and then Sunday we're playing Hangar 24 Brewery in Irvine.
Awesome. All right. Well, hey, let me know. Message me when you're in we got the dates because I will forget these things as I always do. But I'll come check you out at the fair. I live walking distance from it, so it makes it easy.
Sweet. Perfect.
All right, great, Corey. Thank you so much for coming on today. I appreciate it. Thanks for answering Les's and others' questions out there, and I look forward to having you on again soon, man.
Dude, appreciate you having me out. Appreciate everybody, man. Merlin, you're awesome, dude.
All right, take care, buddy.
Love it. Talk soon.
See ya. Guys, that was Corey Lane of Traders Army. You can find out more information about Traders Army by going to TradersArmy.com, which I had the page up here just a second ago. He's got all kinds of different information regarding classes, and I see a bunch of questions about pricing. It varies depending on what you want, but he's mentioned $149 a month, I think was the number he threw out there. So you can find out more information at this website, TradersArmy.com. Okay, now I have stuff I need to get into because I didn't plan on going that long, but I love talking with Corey and I could talk with him for hours. I want to go over stuff that happened today, and then we'll let you know about tomorrow. Obviously, tomorrow, no show tomorrow, guys. Sorry, I got a lot of other commitments I got to take care of. But here's what happened today, and I thought this was interesting. We talked about the banks really being the issue this week and a lot of volatility. Look at JP Morgan and Goldman Sachs. They've had blowout earnings. JP Morgan beat earnings estimates by almost 22%. Goldman Sachs beat by almost 52%, yet both of them were down on the day. You talk about it, you're like, oh, we're doing everything we can. We almost 50% earnings surprise, and we still are down on the day. Is that the buy the rumor, sell the news? I don't know, but that's what happened out there today. You also had PepsiCo and ConAgra Brands report earnings. ConAgra down about 5%, even though they beat on earnings. Now, on the economic front, what is that? There we go. On the economic front, this was the concerning piece. You guys heard me talk about this yesterday where I go, I don't think we're dropping down to 0.4 on core CPI. We're back up at 0.9%. So this whole transitory stuff, man, that's really a challenging one for me to swallow, and all of a sudden those prices spiking on inflation. So that talk track, which seemed to be calming down a little bit over the past couple weeks, is all of a sudden going to start to really go top shelf discussion here. And again, tomorrow, which I'll show you, we have another economic announcement going on. Other than that, you have some stuff later tonight for the British pound. That's CPI and PPI as well. I like to call it the Magnum PI day. You also have coming up here in just a little bit, the New Zealand dollar coming out with their rate announcement. Everything expected to stay the same. Now, for tomorrow, earnings-wise, it's more banks. Bank of America, Citigroup, we have Wells Fargo, BlackRock, and the Pinnacle Financial all reporting earnings tomorrow. Those are all before market open. And then you have this lowly little straggler in the airline space. There's more of them next week, but Delta reporting earnings tomorrow as well before market open. Now, on the economic front, we have New Zealand coming out here in just a couple of hours with a rate announcement. You also have Canada coming out tomorrow morning. So Brendan, who's probably dashed off to go to some cryptocurrency convention, he will be I don't know, either rejoicing or suffering on a rate announcement from Canada. They're expected to stay the same, so no big news there. Probably the most important piece for tomorrow will be what's happening at 5:30 in the morning. Up near the top there, you can see for the U.S. Producer Price Index, they're expecting the core numbers to drop as well from 0.7% to 0.5. If CPI was any indication, it would be no surprise to see core PPI at 0.7 or higher. Also down a little bit lower for the U.S., we have crude oil inventories coming out, and they have an expectation that's going to get a little better, but still a contraction of supply by 4.3 million barrels tomorrow. That will be at 7:30, 1 hour into the trading market day. Okay, I think that's going to do it for me. What did I say? So tomorrow I won't be doing a show. Sorry, it happened. It's going to start happening every now and again. On Thursday, Chris Collins, who is in here, is actually a friend of mine from Northern California. Although you said it says Chris Collins 327, shouldn't it be 454? No one wants a small block 327. Give me the 454 big block, Chris. Come on. He asked a few questions about cryptocurrency, some basic foundational questions. So I'll probably do a little bit more of a crypto show since we haven't really addressed it too much over the past week or two. That'll be on Thursday, and then Friday it's back to my whiskey drinking ways, and take it from there. All right, for anybody who has questions, comments, feedback, things you'd like me to address, shows you'd like me to do topics on, today was spurred because of Les Gold here, who's first one in this trading room almost regularly. So Les, thank you for that. Sorry it took me so long to get guests in the program. Corey and others have been extremely busy, so sometimes it's hard to get them on the program, but hopefully that did answer some of your questions with regards to options. If you have anything else, email me at TraderMerlin@gmail.com. That's the easiest way to get in touch with me, or go down below the YouTube video if you're watching this archive version. Comment down below. That always helps out in the search algorithms. Subscribe, hit that like button. Happy trading, everybody. I will see you tomorrow. Or not tomorrow.